Hello YouTubers, just going to go over my account in a brief update for December 22nd, 2020. As you can see, the market's down, did a little pullback, not really affected too much. Bank of America dropped 53 cents per share, but it's still above my $29 strike. So as long as it stays above that, if you've been following my videos, you know exactly what happens. If it goes below it, you know exactly what we'll do. General Motors, even though it did go up a little bit yesterday, dropped back down today. With the calls that are sold against it, the call value on the call that expires on the 24th went up 28 bucks, and then the call that expires on the 31st went up $54 in value. So that $124 drop in value gets reduced to a $42 drop in value. So not bad, right? Wells Fargo, it dropped below my put price, so it's now considered in the money. With that being said, if you remember, your break even is the put price minus the premium you collected. In this case, it's 46 cents a share. So my break even price is $28.54. So even though it's $28.96, I'm still not at a loss yet. And even if it does go below that, maybe you have, maybe you haven't, but what we would do is sell calls against it. So I did want to take a quick minute to go over charts. I still don't know how to read them, but I wanted to talk about them, and we'll look at how the charts match up to the positions that I have in my account. Let's look at Bank of America first. So the charts indicator is this little button right here. I don't know if it shows up on the screen, but sometimes the pop-ups on my screen don't show up on the YouTube video. It's really weird. So first indicator I have up here is called the volume weighted average price, or VWAP. It is set to 3 months or the quarter, and it's set to give you the price for the day. So the VWAP for Bank of America is this blue line right here, and here's the market price. So as you can see, as it gets closer to the blue line, it pops back up, and we're up a little bit today. But this the second indicator, the relative strength index, kind of gives you the kind of the buy and sell. If it goes above the blue line, it's overbought. If it goes below, it's oversold. And then the swing index, when that gets out of whack, it's probably an indication of what direction the stock can go. Again, I don't understand how to read charts yet. I will. We're going to learn as we go on this. It's a little bit like palm reading, so it might indicate something, but it doesn't necessarily mean 100% that's where it's going. Because if it did, we'd all be millionaires, right? But there is a strong indication. The YouTube viewer Don was showing me something about, or not showing me, but talking about how General Motors is going to pop up, and it was almost like he had a crystal ball or something, but he attributed it to charts. So we're going to start including our charts in some of our videos, and maybe we'll do that on Sunday as we're making our decision and see where we're at. The second position, General Motors. Let's look at the chart on that. Again, 3 month and day indicator, so this represents 3 months, and each blip equals a day. So if you look at this gray line right here, it actually says 400-ish, and hopefully it shows up on the screen, but this gray line is the price I paid for it. So blue equals trend up, gray equals on trend, even though it kind of goes down, whatever. That's how this indicator works on Tastyworks. So yeah, maybe I'm saying it wrong, but I'm pretty sure that's what it means. So on trend, and this is something that Don had mentioned. It could be in trend reversal. It kind of looks like it. It's going red. But as you can see right here, this is an indicator that a lot of people use. Once the stock touches the VWAP, it's considered a good buying opportunity. So if it does drop down to here, which is $28 price, which I doubt it is going to drop there quickly, but if it does, it'll create a good buying opportunity and spring back up like it does consistently. Now, General Motors has been in the overbought territory a couple times. over the last 3 months, and right now it's been trending down from the last overbought territory. So last time it's trended down like this was back in September, early September, and look, kind of hit this same marker right here, and it was in the red, and ever since went back up and didn't really come back down to that line until now. So hopefully that says something. We'll see as this plays out. We'll learn what the charts mean with this. Go back to my my third trade, Wells Fargo. Wells Fargo is pretty high on the VWAP thing. It is kind of a little bit high on the what is this? The relative strength index, the RSI. It's not above the line, so that's good. But it's kind of, as you can see with the General Motors one, it's still plenty of room for it to go down in price. Good buying opportunities are below this blue line, according to market average pricing. So, and we're not too far away. There's a lot of stocks, and I'll show you one that's pretty far out of whack. The swing trade, what is this called? The swing index. That just shows you like how far. I mean, I'm kind of out of, I guess it's like it goes way up here. It's it's oversold here, but the price really doesn't kind of change. It lets it normalize, I guess. Yeah, so there you go. Let's take a look actually at Tesla. This one's a good one to kind of compare these two. Look at this. That's crazy. This with the swing trader thing here. The RSI looks like it was an overbought territory for a long time. For since November pretty much. So coming back down, it would make sense. It's also above the volume weighted average price of the VWAP is 509. So I mean, if this is a stock, I'm looking at this going, if I sold a naked put at 509, oops, trade put option Tesla 509. Okay, we'll do 510, and we'll do 2 weeks out. So you could probably that's each one of these blue lines here represents one standard deviation, and going past 2 standard deviations is pretty rare, especially after 9 days. But in this trade right here, you would need $12,000 to make $100. It seems like if the indicators are saying anything, it seems like that would be, once it hits that price, look at this, every time it hits the price, it kind of springs back up. It would, it probably wouldn't go there very quickly if it did, and good chance it would spring back up. But again, these are indicators that I don't know how to read, and I know it's better than reading palms. I know I just said that, but to me, this might as well be a completely different language. So as we go, right? Let's actually look at SPY real quick on the indicator. So SPY, same. It does actually pretty big drops. It hasn't been in the overbought territory in the last quarter. Look at that drop. That's a pretty nasty one. Oh, that was right before the election. I remember that. I remember thinking that was a bloodbath because it dropped down in price pretty good. And then boom, after election was pretty high. Kind of the price stabilized. But another one. Wow, look at that, 350. So if you went over here, did a trade, short put at the 350 strike. For end of year, it's $69, right? You need $5,000 of this buying power. It doesn't seem like a good deal, but it's not bad. Actually, just do a quick little test here. Let's look at a short vertical. Take that over to 350, 81 POP. Reduce this, doing this short vertical or a put credit spread on in the YouTube Robinhood jargon, put credit spread or actual short put vertical. You go $1, you increase your so $2, so $200 risk for $22. That's a 10% return on your money. So in the event that it stays above 249 by expiration, actually let's go back down. Let's go 9 days. So it's $11 on the $200 risk. And mind you, this is a limited risk trade. That also increases that. But anyways, long story short, you risk to lose 200 and you stand to gain $11. That's for a whole other conversation. That's not part of our strategy. So let me clear that out. But let's look at one more before we go. Let's look at Microsoft since it's on the list. It's one of the more expensive ones. Look at that. It dropped way below and it seems like the lower it went, the quicker it shot up. It was like almost like there's some elastic rubber band tied to that line there. Huh. Interesting. Look at that swing index here. So if I mean, let me tell you, I'm already an expert in reading these. I'm just kidding. If you look at that though, that's an arrow pointing down. That's an arrow pointing down. I'm wondering if it's going to go down tomorrow. Because that, even though that was an arrow pointing down, it was pointing that way, and it basically stayed flat. There might be something to this chart business. I'm kind of liking it. Anyways, if you'd like to see more videos like this, sorry this was kind of rambly, please hit that like button, subscribe, and turn on your bell notifications if you want to see them. If you have any questions, please comment those down below. I'll do the best I can to respond. And in some cases, like this video, I took the chance to respond to a comment that Don made, and we talked about charts and how you can find or navigate to the charts on Tastyworks. All right, talk to you later.